So, we've spoken about one of the first strategies for raising money for the sector being enhanced fiscal space. Now, that sounds like a broad statement thrown out there, and most of us might not know the meaning. And yes, it is a broad statement thrown out there, but we are going to simplify it as much as possible. Fiscal space is basically the budgetary room that the government has to finance the health sector or any other sector without affecting or distorting the economy or some of the other sectors. So do not take all the money out into this sector and leave all the other sectors that are critical to the economy that are employing a lot of people without anything. Basically, just there are many two or three methods of calculating fiscal space, but one of the simpler ones is saying how much money is coming in to the government and how much is going out. So take the total tax and non-tax revenue and external grants, add them to all incoming money from debt. It sounds complicated, but you can just think about it as all the revenue minus all that's going out. You see here, tax is a keyword. In fiscal space, tax, revenue, both tax and non tax are keywords. The other keyword is debt. Let's before we move on to tax, let's talk first about the debt component of this fiscal space issue. Fiscal space, when we talk about debt, debt is a real, it takes out from the budgetary room, especially if you're paying a huge portion of all your revenues back out to people who credited you. So, what you want to do is manage this debt as much as you can. If you find that the economy is performing badly, you're then supposed to try and restructure this debt, meaning, for example, pay slower, pay in different ways, pay in the high seasons, or just restructure somehow. Get some of the financial engineers working with you to get you some methods or ideas for making sure you restructure this. One of the things you can also do is sell your debt to somebody who charges you less interest. So get a cheaper option out. A few countries recently, after the COVID-19 pandemic, have adopted or joined what's called the G20 Debt Sustainability Initiative, championed a lot by the IMF, International Monetary Fund. These countries have seen some of their debt either forgiven or extended for payment during longer periods, so that at this time when countries are recovering from the pandemic, you might not suffer as much as you would have if you had no initiatives like this. So debt is extremely critical to consider because sometimes it takes out while bringing in some money in the short term. Sometimes for the smaller countries, especially the smaller economies, it might actually be detrimental to their economic bottom line or the amount of money they can spend on their citizens during a certain year. Uh, let's move on then to look at how we enhance fiscal space. Remember, we've said fiscal space is the tax and non tax revenue plus external grants plus all the other incoming money, including those that you're being given as debt. And then take out the amount you're paying out as interest and the amount you're paying out as debt disbursements. How then do you enhance fiscal space. One of the first things you do is look at improving your tax systems. We'll delve into this briefly. The second way is adopt counter-cyclical macroeconomic policies. We'll look at this too. And then three, progressively negotiate with your treasury to enhance budgetary allocations to the health system. Let's start with number one, improving tax systems. When you talk about improving tax systems, there's so many facets to this, and it depends on who you're listening to, who you're studying, and which country you're working at, which country you're working in. One of the first things to do when you're talking about improving tax systems is look at number one, policies, tax policies. This is where a lot of the politics is. It doesn't matter which country you live in, tax policy will always be a political issue, one way or the other. We're going to delve into this a bit. You also need to look at the structure of your taxation policies or the structure of your tax system. Who are you taxing more? Where is your money coming from, the revenue? And then who are you taxing more? The second one is, or the third one, the third issue to consider is operation or management of this tax system. And then go into looking at the payment, improving the ways in which this tax can be paid. One of the things you do is digitize as much as possible your payment systems and make them as secure and immediate as possible. And then look at your tax collection points. Where are you collecting these taxes and how? And then the most important one, which tax collectors fail to get involved in, is check how these taxes will be allocated, especially if there were indirect taxes. Because most people or most tax collectors do not get engaged in this. They leave it to the Treasury and others to finance. But it would be a good idea if the macroeconomic policy of a country was made also with the view of the tax collector taken into account, because you cannot really have a good and working macroeconomic policy if you do not know which people pay the most tax, which entities, which sector pays the most tax. Let's look at policy, for example. We're talking about policy as our number one consideration in improving tax systems. You need your policies to be fair. Do not overtax one sector and leave the other. Do not tax too much or too high a percentage of one sector. Make sure that it is non distortionary. Here, let's talk about a certain tax system. Let's look at New York, for example. New York's number one source of taxes is property taxes. That accounts for about 29% of New York's revenue, the city of New York. And then when you get to number three, for example, they get taxes, they collect income taxes, a portion of income tax, which accounts for 13% of their revenue. Should a government policy come up that chases away what we call employees, a government policy that raises too much taxes too high for employees and companies shift en masse, like what's been happening between, I think, California and Texas and Arizona. Should policies change that affect the way taxes can be collected or how much taxes can be collected, then it can be detrimental to the city or the state or the country